Welcome to Striking Option, the show that reveals the options you have to better navigate markets. I'm Jeff Kilburg, and I'm joined today by Scott Bauer. Hey there, Scott.
Jeff, how are you?
I'm doing great, and it's interesting to see the markets after a long weekend. Kind of flat today, but it's interesting to see the trade tensions. They remain front and center. So the question I have for you today is, do you envision these negotiations coming to a head before the big G20 meeting in the end of June?
You know, I think the market is telling us that we don't know. And that's really the honest answer here. And that's why we're seeing continued volatility. This time of year, we typically see volatility really come in, summer months just right in front of us here. But listen, G20's 3-4 weeks away here, and I don't think that many people think much is going to happen in these negotiations.
And I think you're absolutely right, but that is the consensus. I think we could see the market be surprised, though, if we do see some type of negotiation, but it'd really have to see a little more pain potentially in the stock market to bring both leaders to the tables, correct?
Absolutely agreed.
All right, let's get into this first lightning round. You ready, Scott?
All right, let's do this.
Buying opportunity. Well, it's interesting to see. We talk about the stock market, we talk about the volatility, we talk about the range. But as you see the markets are moving, what are your thought process as we see that 2,800 level kind of being a little bit of a support?
You know what? I love the added volatility that we just talked about that's still in the marketplace right now. And so what an investor can do to take advantage of this, to look at the market even a little bit down from here or upside, is to buy a 1x2 put spread. That's the 2750, 2700 put spread, which is buying one of the 2750 E-mini S&P 500 week 3 June puts and selling two of the 2700 E-mini S&P 500 week 3 puts. An investor can collect about $4.31 to do that.
Well, this is really interesting, and maybe explain for just a quick second, the 1x2, you define the range of the E-mini S&P 500 is inside of these trade negotiations, so by buying one put and selling two, you're happy to own the market under 2,700 after you collect that premium, correct?
Yeah, it's actually 2650 when you look at it, because I'm long, an investor is long the 2750, short two of the 2700, so that break even would be 2650, and an investor on this type of spread not only has protection all the way down to 2650, but actually collects that credit of $4.31.
Interesting way to use a ratio spread for risk mitigation. And remember, the June S&P 500 futures contract was trading at 28.33 when this 1x2 trade example was priced out, and the at-the-money vol, Scott, was almost 15.
Right, which is really what makes this trade very interesting, because the vol is on the high side.
Great stuff, Scott. And please remember, these are trade examples, not trade recommendations. Let's move into the second lightning round.
All right.
Treasuries topple. We have seen just a plummet in the 10-year yield, down to 2.28%. Caught a lot of people off sides. What are your thoughts, Scott?
I mean, there's no end in sight, it seems like. And just a few months back, we were looking at 250, 260 on the 10-year. Now under 230. Where it goes next, it's certainly, there's a lot of pressure on it.
And there certainly seems to be a lot of strength in the market if you're looking at the 10-year future. Therefore, the trade example I want to utilize is buying a call spread. It seems a little tough to be buying at these levels after we saw the dip down in yield. Of course, they're inversely correlated. But I want to be a buyer of the 126, 127 Week 2 June call spread. That's expiring June 14th. I can buy that 126 call, Scott, for about 18 ticks, and I can sell that 127 Week 2 call for about 12. So it's interesting to see what this call spread is actually going to cost an investor in the event we do go down and see a test at 2%.
Right, which as we were just talking about, short term here, big run to the downside on these 10-year rates, but really no relief in sight, it doesn't look like.
And I think if you look at the global environment, 2.28% is still a juicy yield in comparison to some of the other sovereigns.
No question about it.
All right, Scott, I want to thank you as always for helping on Striking Options, and please tune in every week as we will continue to strike options.